So yes, I have opened chapter number 7. If you see chapter number 7, it is completely about audit evidence. So the name of the chapter number 7 is also audit evidence. So here we are going to discuss around 6 standards. So if you see, not even 6 standards, 7 standards we are going to cover. If you see till now, what are all the standards that we have discussed? Yes, say 200 is done, 210 is done, right, from 200 series, and next from 300 series almost 300 is done, 315 is done, right, 320 is done, 330 is done, and 400 series 450 is done, 408 is not there for our syllabus, and 500 series we haven't discussed yet. Now we will start 500 series. 600 series also not discussed yet. 700 series completely done. All the 5 standards of 700 series is also done, right? So almost all the standards are getting completed, right? Now we will discuss the audit evidence. Here we will be covering 6 standards from 500 series and one standard which is SA 230. Okay, if you see SA 500, which is audit evidence. So with respect to basic concepts of audit evidence, we will be covering in SA 500, like what are the characteristics of audit evidence, and what are certain generalizations related to audit evidence. Like this, the basic concepts related to audit evidence we will be seeing in SA 500. Next we have SA 501. See, SA 501 also deals with audit evidence only, but with respect to certain 3 selected items. Okay, in case of those 3 selected items, which are nothing but inventory, litigations and claim, and presentation and disclosure of these segment information. So with respect to these 3 things, how to obtain audit evidence, we will be exclusively dealing in SA 501. And next we have SA 505, which is very familiar to you, nothing but external confirmation. So during the audit, lot of times you will use external confirmation. So how to perform this procedure with respect to this aspect, we will be covering in SA 505. Next you have SA 510, which is verifying or obtaining audit evidence about opening balances in case of initial audit engagement. So what is meant by initial audit engagement? Is the auditor having any responsibility with respect to opening balances? These things we will be seeing. So if you see SA 510, it will be somewhat similar to SA 710. So in SA 710, we have seen about comparative information. So comparative information belongs to previous year. Previous year figures you will give in the current year as comparative information. Auditor will verify that comparative information. Here also, in case of SA 510, opening balances of current year are nothing but closing balances of previous year, correct or not? So the procedures that you have performed in SA 710 will be somewhat similar. I don't say exactly similar, some similar kind of procedures we will be seeing in SA 510 also. Okay. Next, SA 520, analytical procedure. So how to obtain audit evidence by using analytical procedures, and in which situations you will use analytical procedure. First of all, what is meant by analytical procedure? All these aspects we will be covering. Next, SA 530, audit sampling. So with respect to audit sampling, we will see in SA 530. I will explain while discussing SA 530. And finally SA 230, which is audit documentation. So whatever the evidences that you have obtained in all these standards or various other standards, those evidences needs to be properly documented as per the requirement of SA 230, right? So we will be covering these standards in this particular chapter. So let us start with SA 500, which is audit evidence. Now, what is the objective of auditor as per this SA 500? I told you each and every standard will be having its own objective. So as per SA 500, objective of auditor is to design and perform audit procedures so that he will be able to obtain sufficient and appropriate audit evidence. Now, what is meant by sufficiency, what is meant by appropriateness, we will see it. Okay, these are the two characteristics of the audit evidence we will see in this particular standard only. Okay, next, you can use as audit evidence either accounting records means the books of accounts, the financial statements, the vouchers, right, bank statements, all these comes under accounting records. So you can use accounting records as audit evidence, or other information also you can use as audit evidence. Now, what is meant by other information, sir? So information like minutes book, which you can use as a evidence, but minutes book, it is not part of accounting records, correct or not? External confirmation, all these things which are other information also can be used by you as audit evidence. So you can use audit evidence. See, information used by auditor in arriving at conclusions on which auditor's opinion is based, nothing but audit evidence is based, and it includes both accounting records as well as the other information. Got it? Yes. Next, types of audit evidences. See, the types of audit evidence, you can classify them firstly based upon the nature of evidence. So, on the basis of nature of evidence, audit evidence can be either oral. Oral means through words you will just communicate, or visual. So, through visual also audit evidence can be there. And finally, documentation. So, these are the three categories of evidence based on the nature. Okay, visual, oral, documentary. In case of audit, 99.9% of the cases, auditor should try to get a documentary evidence. So because documentary evidence is more reliable when compared to the other two types of evidences. Next, depending upon the source from which that evidence is generated, you can classify the evidence into either external evidence or internal evidence. External evidence means evidence that is generated outside of the entity. Examples: purchase invoice. Entity has purchased certain goods. For that, you will get a invoice, purchase invoice. Now tell me, who will generate that purchase invoice? Seller of the goods will generate. Seller is a outside party, correct or not? That is the best example for external evidence. Internal evidence, best example is sales invoice, which will be generated within the organization by the entity itself. Now tell me, of these two things, which one is more reliable? Of course, external evidence is more reliable because it is generated externally, right? Next, audit procedures you already know. RAP, FAP. FAP is again of TOC and substantive procedure. This we have discussed almost three times, right? In essay 315 we discussed, essay 330 we discussed, again it has repeated here also, right? Substantive procedures, they can be again bifurcated into test of details, substantive analytical procedure. Test of details again bifurcated into test of balances, test of transactions, right? This we have already discussed lot of times in this marathon session only, right? Next, examples of procedures to obtain audit evidence. So some of the examples of audit procedures which you can perform to obtain audit evidence. Let us see. Firstly, inspection. See, in the examination, they can ask you question on this. How they will ask? They will give certain scenarios, certain 5 to 6 scenarios they will give, and they will ask, in each of these scenario, which procedure is being performed. If you see these type of questions, they are there even in our question bank also. Okay, so by solving that question bank, you will get a idea of types of questions that the institute can ask. So inspection means verifying. You can inspect two things. You can inspect inventory. You can also inspect documents of the organization. These two things can be inspected. Understanding, in the questions also they will ask this only. Okay, auditor has verified detailedly the documents or records of the organization. What procedure is this? They will ask. You have to specify as inspection. Okay, inspection will be done with respect to documents, records and inventory. Getting it? Yes. Next, observation. Observation means just sitting and observing the procedure that the management or other person is performing is observation procedure. Next, external confirmation we will see in SA 505. Generally, to obtain audit evidence with respect to the balances like debtors, creditors, bank balances, for all these things you will use external confirmation, right? Next, recalculation. So management has already performed a particular calculation, like let's say calculation of depreciation. Now auditor again recalculating that depreciation to verify whether the calculation done by the management is correct or not. This is also best example for recalculation. Next, reperformance means management has already performed a particular procedure, like preparation of bank reconciliation statement is a procedure that the management has performed. Auditor is again reperforming that BRS. This is best example for reperformance procedure, right? So you should not confuse. In the there is this particular question, management has prepared the BRS, auditor is again preparing that PRS. What procedure is this? You should say it as reperformance. Students will confuse between recalculation and reperformance. You should not confuse. Okay. Next, analytical procedures. So analytical procedures we will see in essay. There is some construction going on, so these sounds are coming. Okay, analytical procedures we will see in essay 520. Okay, what is meant by analytical procedure we will see in essay 520. Next, inquiry. Inquiry means asking questions. So you will ask questions and you will get answers to that particular question. So those answers are nothing but your evidences. This is also one of the audit procedure that you can perform. So these are the examples of certain audit procedures that the auditor can perform to obtain audit evidence. Next, inconsistency in or doubts over reliability of audit evidence. So auditor is having doubt over the reliability of audit evidence. So is the audit evidence that I have obtained, is it correct or not? He is having a doubt. And next, there is a inconsistency. Means inconsistency means, what is meant by inconsistency? Let's say for example debtors. With respect to debtors, the first evidence that you will see is the sales that you have made to the debtor, the sale invoice. In the sale invoice, amount is being shown as 20,000. This is a credit sale. Now for debtors you will also send external confirmation. When you send the external confirmation, debtor told that, see auditor, I have to pay 15,000 only, not 20,000. Now if you see, there is a inconsistency between two evidences relating to the same aspect. So in case there is any inconsistency, you need to determine what modifications or additions to audit procedures are necessary to resolve the matter and consider the effect of the matter, if any, on other aspects of the audit. So what additional procedures you have to perform to resolve this inconsistency? You need to determine that additional procedures to resolve the inconsistency. Got it? Yes. Next, characteristics of audit evidence. I told you there are two characteristics of audit evidence. First one is sufficiency. Second one is appropriateness. Now, what is meant by sufficiency? Sufficiency refers to the quantity, right? So, if someone offers you food, if you went to someone's house, they will give food and they will ask whether the food is sufficient. That means whether the quantity that is kept to you, is it sufficient? So quantity is related to, sorry, sufficiency is related to quantity. If the same people asks you how is the food, that is related to quality. Okay, appropriateness means quality, understanding. So sufficiency is related to quantitative aspects of evidence, whereas the appropriateness is related to qualitative aspect. See, sufficiency is a quantitative aspect affected by romum, risk of material. So some of the quantitative aspects of audit evidence. So how much audit evidence you have to obtain, that depends on the romum. If romum is high, you will obtain more audit evidence, correct or not? So sufficiency will be affected by romum. Materiality, if the item is very much material, then you will obtain more audit evidence, correct. Next, size and characteristics. So if the size of the organization is very huge, then you will obtain more audit evidence, correct or not? And characteristics of the population. So these things will impact the sufficiency, quantity of the audit evidence. Next, going to appropriateness. Appropriateness refers to quality of the audit evidence. See, this quality will be again impacted by two more things. First one is reliability, and the second one is relevance. Reliability means whether you can believe that audit evidence or not is known as reliability. There are certain generalizations with respect to reliability, understanding. What are those generalizations related to reliability, we will see. So firstly, external evidence is more reliable than internal evidence. This point we have discussed. Evidence that is obtained from outside of the organization, you can believe more on that than the evidence that is generated within the organization, because the evidence that is generated within the organization, that is in the hands of management, they can alter it, correct or not? Next, evidence that is generated within the organization is also more reliable if internal controls are working effectively. See, internal evidence is also reliable if controls are effective. Next, the evidence that is obtained directly by the auditor is more reliable than the evidence that is obtained through the management or through any third party, understand? So if you obtain the evidence first hand through your hands directly, it is a more reliable. Next, documentary form is more reliable. I told you this already. Than visual and oral, documentary evidence is more reliable, and also evidence in original documents is more reliable than photocopies, right? Next, using the work of management's expert. So, auditor, can he use the work of management expert? Yes, he can use. For example, in the entity there is a provision for gratuity. Now, provision for gratuity, it involves various calculations, various assumptions about how many employees will retire, how many employees will stay for more than 5 years. If they stay for more than 5 years, how much amount we have to pay, like this. Lot of assumptions and calculations will be involved in case of provision for gratuity. Now management, they cannot calculate this provision for gratuity. They have to depend on some expert who can help the management in making these calculations. So management has hired a expert for calculating provision for gratuity. Now auditor, during the audit, he has to verify that calculations, verify that assumptions, correct or not? Now auditor, if he wants, he can appoint his own auditor's expert, or he can also rely on the same management expert that the management has already appointed. Now if auditor decides to use the management experts instead of using auditor's expert, then what aspects need to be considered by the auditor before deciding whether to use the work of management expert or not? Let us see that. See, before deciding to use the work of management expert, consider the following things. So competence, capability and objectivity of expert. Competence means what is the capability, what is the experience of that expert. can he make the calculations properly or not, that you will consider. Now how can you know about the competency of that expert? By going through certain aspects like personal experience. If already in the past you have already used the work of that expert for some assignment, then you already know the competency capability of that expert. Next, discussion with the expert, you can once just discuss with the expert. So once you speak with him for 15 minutes or half an hour, you can get to know about his knowledge, correct or not. So discussions. Next, discussion with others who are familiar with the expert's work. So there might be some of your friends, there might be some of your friends who are also chartered accountants, who have used the work of that expert in the past. Then by discussing with them how did that expert has helped you, you can get to know about that expert's knowledge capability, right? Next, knowledge of experts qualification. So just like chartered accountant, if he is also having any qualifications like actuary is a professional, right? So if he is having any such specific calculations, then also you can rely on his work. Then also you will get to know about his knowledge, capacity, capability, right? Next, published papers or books. So when will you write a book? If your knowledge overflows, then you will write a book, right? So if he has wrote any such books or documents or any papers, you can go through those articles, books, to get to know about his knowledge, correct or not. So by going through all these things, you will get to know about the knowledge, capability, capacity of the expert. Next, now by doing all these things, you got an idea whether that expert is having knowledge, whether he is having capability to do the work or not. Now you will see, you will understand the work that the expert has performed. So first of all, you have understood the expert. Now you will understand the work that the expert has performed. So for this purpose, what you will do, you will understand relevant field of expertise. So if you see, for example, in case of doctors, there will be lot of specialists. There will be one doctor for heart, there will be one doctor for eye, like this. Are there any specializations in the field of expert? If yes, in which thing he is specialized, you need to understand it. Next, whether experts field has areas of specialty. Next, professional or other standards apply. So just like for chartered accountants, we are having auditing standards, accounting standards, just like that for the work of the expert, are there any standards that are applicable? If there are some standards that are applicable to the expert, and did he follow that standards? If he follows that standards, of course auditor can place more reliance on his work, right? Next, assumptions and methods used by the expert. See, if the work of expert involves any assumptions or any methods, then you have to understand what assumptions expert has used, what methods the expert has used, and those assumptions and those methods, are they reasonable or not? This you will see. Okay, so this is how you will obtain understanding of the expert's work. Okay, expert is having competence, capability, and he has also done his work properly. Now you will see whether that work is appropriate for me. See, just because of the reason that he is having proper knowledge and he has done the work properly, I will not use it if I have no use of it, correct or not? Only if that work is relevant for me, I will use. Otherwise, why will I use? Correct. So you will see that evaluate appropriateness of the expert's work. Clear? Yes. Next, the concept of audit trail. Sir, what is meant by audit trail, sir? See, audit trail is a feature that will be there in the accounting software. Okay, audit trail is a feature that will be present in the accounting software that the organization have. Now what will this feature will do, sir? It will maintain a record, it will maintain a log of who have passed entries in the books of accounts, that is in the software. And at what time and at what date they have passed the entries, and who have altered the entries, and at what time and at what date they have altered the entries. All this record will be kept by this feature, and we will call that feature as audit trail. Now tell me, is this audit trail feature useful for the auditor? Of course it is useful. How? Now auditor, he goes to the entity at the end of the year to do the audit. Once, if he gets any doubt about any transaction, he will go to the audit trial feature and he will check who has passed this entry, when it was passed, and he will ask that doubt to that person, correct or not. Next, he will, by going through the audit trial, it will have record of all the changes that are made to the particular transaction, correct or not. Now if any particular transaction has been changed a lot of times, then there is a possibility that there can be some adjustment or there can be some fraud that might have taken place in the transaction. So auditor will focus more on the transactions, correct or not. Yes. So for all these purposes, audit trial will be useful for the auditor. He can basically track the history of the transaction with the help of this audit trial feature. Got it? Yes. So now we will see some of the advantages of this audit trial. So firstly, it will enhance internal controls and data security. So I told you, I explained you what is meant by audit trial. Now tell me, can audit trial be called as an internal control? So since it will keep a track of all the people who have made the changes, at what time it has been made, if any fraud has been taken place in entering the entries, you can identify it by going through the audit trial. So it will act as a internal control. Audit trial will increase the internal control in the organization, correct or not? Yes. It will also fix the responsibility on a particular person who have entered into the transaction or who have made entries in the books of accounts, because audit trial will clearly keep a track of who has altered the entries, who has made the entries, right? So you can fix the responsibility on the people, right? Next, rebuild events upon occurring of some problem. So if any problem occurs, either auditor or management can rebuild, trace back to the origin of the transaction by going through the audit trial feature, correct or not? Yes. Next, specify reason of the problem. So you can identify the reason for the problem that has occurred, and ensuring operations of system as or going through as intended. So audit trial will help you for all these things. These are advantages that you will get because of audit trial. So hope you understood what is meant by audit trial and its advantages. Now we will start with the next standard, essay 501. So I told you, essay 501 also deals with audit evidence only, but with respect to certain specific selected items. So if you see, even the name of the standard, it says audit evidence, specific considerations for selected items. Okay, how many selected items? For 3 selected items, certain specific consideration we have seen in third chapter about, as not third chapter, fourth chapter, about assertions, right? Balance sheet items will have certain assertions, P&L items will have certain assertions, right? So with respect to these 3 items also, not all the assertions we will be dealing, only with respect to certain specific assertions or specific consideration. So first of all, we will see what will be covered in this essay 501. So the assertion that will be covered, and with respect to which item. So with respect to, first of all, inventory, existence and condition of inventory. So to obtain audit evidence about existence and condition of inventory, what audit procedures you have to perform, that we will be dealing here. Okay. So with respect to inventory, there are other assertions also apart from existence assertion, like completeness, valuation, right, rights and obligation, all those assertions we will not be seeing. Generally in case of audit, what happens is, let's say for example, there is a item fixed assets. Fixed asset is a balance sheet item. So for the fixed asset, the assertions that will be there is existence, correct, completeness, right, next rights over that asset, right over that asset, right, next valuation of that asset, and presentation and disclosure, like this, these type of assertions will be there. Now auditor has to obtain audit evidence with respect to existence of fixed asset. Okay, so for that he needs to perform certain procedure. Next, auditor should also obtain audit evidence with respect to completeness of fixed asset. Again, audit evidence with respect to right over fixed asset, audit evidence with respect to valuation of fixed asset, like this. For each and every assertion of the item, auditor has to perform audit procedure and obtain the audit evidence. Clear? Now, in case of SA 501, we will be dealing only with respect to what procedure has to be performed with respect to existence of inventory, not all the other assertions. Next, with respect to litigation and claims, the assertion we will be addressing is completeness. Okay, to ensure, to obtain audit evidence about completeness of litigation and claims, what audit procedure you have to perform, that we will be seeing. Similarly, segment information. So with respect to segment information, presentation and disclosure. So with respect to audit evidence about presentation and disclosure of segment information, what audit procedure you will perform, that we will be seeing. Got it? Yes. So let us first of all start with existence and condition of inventory. So with respect to existence of inventory, tell me generally what audit procedure you will perform. You will perform physical verification. You will physically go to the place where inventory is present and you will check whether actually inventory is in existence or not. Correct. So the same procedure is prescribed even by the standard also. See, attend at physical inventory verification. So by attending at physical inventory verification, what should you do? You have to evaluate management's instructions and procedures. So management would have given certain instructions to the employees of organization for doing the physical inventory verification. You need to evaluate whether those instructions given by the management are they proper, or should additional instructions should be given. Like this, you will evaluate the instructions given by the management. Next, you will also observe the procedures that the management is performing. So for physically verifying the inventory, they will perform certain procedures, correct or not? So you will observe those procedures. Next, you yourself will also inspect certain inventory and you yourself will perform certain test counts. Got it? So by attending at physical inventory verification, you will do these four things. Got it? Yes. And while attending at the physical inventory verification, what aspects you need to consider with respect to inventory? So you need to consider what is the nature of inventory and stages of completion of work in progress. So in this organization, to convert raw material to finished good, how many stages are there, that also you need to consider, because based on number of stages, that many number of work in progresses will be there in the organization, correct or not? Next, romum, risk of material misstatement of inventory you need to consider, and nature of internal control around that inventory, timing of physical verification, whether perpetual inventory records they are maintaining. Perpetual inventory record means, see, there are two types of systems for maintaining inventory records. One is perpetual system, another one is a periodic system. So under perpetual system, what happens is, as and when the transaction takes place on a real time basis, the entries will be made into the books of accounts. That will be perpetual system. In case of periodic system, once the transaction happens, after some 1 week or 10 days, all the transactions will be entered together in the records. That is periodic system. So if the entity is maintaining perpetual system, the way how you will audit will be different. If the entity is maintaining a periodic system, then the way that you will audit will be different. So you need to consider this also, whether entity is maintaining perpetual system of inventory records or periodic system of inventory records. Next, locations at which inventory is held. Okay, at how many locations inventory is there, this you need to know, because you have to plan the presence at the physical inventory verification location. Correct. Next, whether assistance of any auditor expert is required, or auditor he himself can handle the situation. This also should be considered by the auditor. Got it? Yes. Next, inventory verification, certain special cases. So certain special scenarios, certain special cases with respect to inventory verification we will see. So I'll explain it directly here. So inventory verification, generally you need audit evidence about inventory that is present as on 31st March of so and so year. Correct or not? So as on this date, how much inventory is there? For that you need the audit evidence. Now, auditor, let's say for example, management, they have conducted physical inventory verification on some other date apart from 31st March. Understanding? So they have conducted physical inventory verification on 29th of March only, and auditor has attended this physical inventory verification. In this situation, auditor got evidence about inventory present as on 29th March, but he wants evidence about inventory as on 31st March. So what he will do for this inventory, however he has the evidence, so for this he will add purchases and reduce sales that has taken place during this period, and he will perform procedures on this purchase and sales. Through that, he will obtain evidence about inventory as on 31st March. Understanding? Yes. Similarly, if the entity has conducted physical inventory verification after 31st March on 4th April or some other day, what he will do for this inventory, he will add sales and reduce purchases. Correct or not? Yes. So this is the first special situation where entity has conducted physical verification of inventory on a date other than 31st March. Got it? Yes. Next situation, 31st March, entity has conducted physical inventory verification on 31st March only. Okay, on 31st March, exactly entity conducted physical inventory verification. But our auditor, he was not able to attend the physical inventory verification that is conducted as on 31st March due to certain scenarios, like he is not feeling good or some of his personal reasons or whatever the situation might be, he was not able to attend as on 31st March. But entity conducted physical inventory verification as on 31st March. Now auditor was not able to attend. So here what the auditor will do is, auditor will conduct physical inventory verification after 31st March. So on some 2nd of April or some other day, he will conduct physical inventory verification. So by conducting physical inventory verification on some other day, he got audit evidence about the inventory as on that date. For that, he will again make the same thing. Reduce sales, add purchases. Sorry, reduce purchases, add sales. By doing this, he can obtain audit evidence as on 31st March. Got it? This is the second special scenario. So in the first scenario, auditor attended, but it was conducted other than 31st March. In second scenario, it is conducted on 31st March only, but auditor not attended. Got it? Yes. Next, coming to the third scenario. In case of third scenario, what happened is, entity conducted physical inventory verification on 31st March only, but it is impracticable for the auditor to go to that location. Impracticable means it is not at all possible, like that inventory is located beneath the earth, or that inventory is located in the borders where there is a threat, okay, army threat is there. If auditor goes there, his life is at threat. So in such situations it is completely impracticable to attend physically at that location, correct? So this is the third situation. Then what the auditor will do? It is impracticable to attend, but auditor wants evidence about the inventory. He will see whether he can perform some alternate audit procedures to obtain the evidence. So what could be the alternate procedures? See, he cannot physically attend, but he will see whether I can send drones. So through drones, can I obtain evidence about the existence of inventory? Like this, he will check whether it is possible to obtain evidence through alternate procedures. If it is not possible through alternate procedures also, then he will modify his opinion, because audit evidence is not there na, he will modify his opinion. Got it? Yes. So those are the special scenarios. Okay, all those three special scenarios you will find them here. Next, inventory under the custody of third party. That means the entity's inventory is available with third party, like entity has sent them on sale or return basis or on consignment basis, in which situations the inventory is present with the third party but entity is the owner. That will be present in the balance sheet of the entity, but physically it is there with third party. In that situations, what the auditor has to do? Auditor has to obtain a confirmation. See, inventory under custody of third party, if it is material to the financial statements, request confirmation from the third party. So he will send a confirmation to the third party. See, third party entity is saying that inventory is present with you. Is it actually present with you? Please give me a confirmation. Clear, right? Like that the auditor will say. Auditor will perform procedure. If at all it is not possible, the entity is not allowing you to send a confirmation, or you are having a doubt over the confirmation sent by that third party. Okay, third party has given confirmation that yes, inventory is present with me, but auditor is having doubt. He is not able to rely on the confirmation given by the third party. In such situations, what the auditor will do? See, if there is a doubt about the integrity objectivity of third party, then auditor he himself can attend or arrange another auditor to attend that location of third party and check the inventory. He can also use service auditor's report or inspecting documentation regarding inventory held by third party. So from these things, he will do any of the thing if he is having doubt over the integrity of that third party. Next, perform inspection or other appropriate audit procedures. So this way you will obtain audit evidence about inventory that is located at the third party's location. Clear? Yeah. So with respect to inventory, it is done. Now we will go to litigations and claims. So with respect to litigations and claims, what assertion we are addressing? We are addressing completeness assertion, correct or not? So procedures to identify litigations and claims. So what procedures you will perform to ensure that all the litigations have been included in the balance sheet or the financial statement? See, inquire management or others within the entity. You will ask questions. Inquire means asking questions. So you will ask whether any litigations that have been missed from recognizing in the books of accounts, give us a complete list of litigations. Like this you will ask questions with the management, because management are the people who will have complete information about the affairs of the organization. So first of all you will start with the management only. Next, you will review minutes of meetings of board or those charged with governance. See, if a entity is facing any litigations or any claims or any court cases, discussion about how to resolve it, what action should be taken against it, it will be discussed in the board meeting, correct or not, or the any other meeting that the entity has conducted. So by going through the minutes of that meeting, in the minutes what will be there? Everything it will be detailedly written down, whatever is discussed in the meeting. So by reading the minutes of the meeting, if at all any discussion about the litigations or claims has taken place, auditor will get to know about that, yes, these litigations or claims are existing against the entity. Correct? Yes. Next, review legal expense account. So when you have inquired with the entity, management told that, see auditor, we are not having any litigations and claims. But when you are going through the profit and loss expenses, you found legal expense account. Legal expense account means fees that you have paid to the lawyer or some other expenditure with respect to the legal cases will come under legal expense. Now if entity is having no legal cases, why is it paying legal expenditure? So this will also reveal some that some of the legal cases are pending against the entity. Correct or not? So these procedures also you will perform. Clear? Yeah. So if in case, see, if the auditor assess Romum regarding litigation or claim, then seek direct communication with entities external legal counsel. External legal counsel means entities lawyer. So if the auditor is having more doubt, if he has assessed that the risk of material misstatement in case of these litigations and claims is very high, then it is better to once you yourself directly consult with the lawyer of the entity. So that you will do. If management refuses the auditor, so auditor wants to directly consult with the lawyer, but management is not giving access to the lawyer. Management is refusing. Auditor, you should not speak with the lawyer. Lawyer also not responding to the auditor. In this situation, auditor, see, communicate with entities external legal counsel. Management is refusing, or legal counsel he himself is refusing to respond. In this situation, auditor will see whether I can perform any alternate audit procedures to obtain evidence about completeness of these litigations and claims apart from speaking to the external legal counsel. If you are able to perform and if you are able to obtain evidence, then that is well and good. You will perform those procedures and you will get the evidence. If it is not possible to perform alternate audit procedures also, then what you will do? You will modify your opinion. See, auditor is unable to obtain sufficient appropriate audit evidence by performing alternate audit procedures also, then auditor shall modify the opinion. Clear? Yes. So this is with respect to litigations and claims. See, another important point, I told you that auditor, he will communicate with the external legal counsel, right? Now whenever you are communicating with the external counsel, whatever the letter that you write to the external legal counsel, that letter should be always on the letterhead of the client, letterhead of the management. You should not use letterhead of auditor, because that external legal counsel is appointed by management. He knows who is management, the identity of management. He doesn't know who the auditor is. Correct or not? Auditor's identity is not known to the external legal counsel. So if you send the request on letterhead of the auditor, there is high chance that legal counsel will not respond to it. So you should always use the letterhead of the management. Clear? Yes. So see, letter of inquiry has to be prepared by management on company's letterhead and to be sent by the auditor. So it has to be sent from the auditor's mail ID or through auditor's address, but on the letterhead, okay, you have to type this letter on the letterhead of the entity client. Clear? Yes. Next, segment information. So what is meant by this segment information, sir? See, segment information means that if the entity is doing businesses in more than one location, like in some 10 or 15 countries it is doing, or entity is having certain 15 to 20 products, in such a situation, entity can give performance of each location in which it is operating, performance of each product. You will call it as nothing but segment information. Okay, product wise you will segmentize the revenues, purchases, expenditure, and you will present it. That is segment information. So with respect to segment information, the assertion that we are addressing is presentation and disclosure. So whether proper presentation of segment information has been done, whether proper disclosure of segment information has been done or not. That's what you are checking. Correct? Yes. See, so obtain sufficient appropriate audit evidence regarding presentation and disclosure of segment information. So for this purpose, what audit procedures you will perform? See, understanding the methods used by the management. So what methods management is using for preparing this segment information, you will understand that methods. See, basically the accounting standards, Indian accounting standards, they have prescribed certain methods for bifurcating the revenue, for bifurcating the expenditure, because whatever the in the books of accounts, the expenditures that you will maintain will be for overall company, but in segment information you are bifurcating product wise or location wise. In such a situation, expenditure should also be bifurcated. For that, how you are bifurcating the expenditure? So you will follow certain methods. Correct? Next, auditor has to understand that methods. Next, whether such method results in disclosure as per the applicable financial reporting framework. So whatever the method that the management is following for preparing that segment information, by following that method, can the presentation and disclosure as per the applicable financial reporting framework, can that type of presentation be achieved, or will it deviate the requirements of applicable financial reporting framework? Okay, that you need to see. Next, test application of such methods. Once auditor he himself has to apply that methods and test whether proper results are being occurring, and perform analytical procedures and other procedures. Got it? Yes. Next, some of the examples of matters relevant in obtaining understanding of methods used by the management. So here the first step is understanding the methods used by the management. So what are some of the examples of ways through which you can obtain understanding of those methods? So how the management has eliminated intersegment amounts. Intersegment amounts means, see, if you see segment wise, North India, South India. So entity is having operations in North India, operations in South India. There is a branch in North India, there is a branch in South India. Now, if the transfer takes place from South India to North India, in segment information that will be sale for South India, purchase for North India. But if you are preparing the complete picture, complete financial statements for the entire entity, this inter transfer between North India, South India has to be eliminated in the complete financial statement. So how you are eliminating it? So by this, okay, by understanding this, you are understanding the methods that the management is following. Next, comparisons with budgets and other expected results. So management, it would have prepared budgets, so you will compare the actuals with budgets. Next, allocation of assets and costs among the segments. So for allocating the entire assets of the company, how the management is allocating among the segments, in which ratio they are allocating. Let's say for example, there is factory. Now this factory belongs to company. In the financial statements you will show that it belongs to company, but when you are preparing the segment information, so for product 1, product 2, product 3, you have to bifurcate the value of this factory among the 3 products. How you are bifurcating it, in which ratio? Whether you are bifurcating it in the ratio of sales, or in the ratio of how many products are produced in that factory. So which method you are using? So by understanding that also, you will obtain understanding of methods that the management is following. Next, consistency with the prior period. So whether the methods that the management has used in the current period, are they consistent with the methods that the management has used in the previous year or not, you will see. So whatever the methods that you have used in the previous year, same method should be used in the current year also. Correct or not? It is not that you can use whatever method you wanted in each of the years. So consistency will also be checked by the auditor. Right. Now let us start with essay 501, which is external confirmation. So what is this external confirmation, sir? See, external confirmation is a type of audit procedure that you will perform. So you can use this external confirmation with respect to debtors, with respect to creditors, right? With respect to bank balances, you will send a request to that particular third party to confirm whether the amount is correct or not. So this is external confirmation which can be used as a audit procedure. See, meaning is that audit evidence obtained as a direct written representation, response to the auditor from a third party in a paper form or by electronic or other media. Next, types of external confirmation request. There are basically three types of external confirmation request. First one is positive confirmation request. So in positive confirmation request, what will happen? Let's say, for example, a debtor in the books of accounts of the company, it is showing that Mr. A has to give 2 lakhs to the company. So to confirm whether this 2 lakhs is correct or not, auditor he sent the external confirmation to the Mr. A stating that, see Mr. A, in the books of accounts it is showing that 2 lakhs has to be given by you. Now tell me whether this 2 lakhs is correct or not. Now here you will ask Mr. A to please respond to me whether you agree with this amount or you don't agree with this amount. In both the situations you give a response to me. That is a positive confirmation request. So in positive confirmation request, you will ask for the response in both the situations whether he agrees or doesn't agree with the amount. Whereas in case of negative confirmation request, what happens is you have sent the confirmation request 2 lakh rupees, and you will tell the debtor that, see debtor, if you agree that the 2 lakh amount is correct only, you don't respond me. If you don't agree with 2 lakh amount, if you feel that less amount has to be paid or more amount has to be paid but not 2 lakh rupees, then you respond. Understanding? That is negative confirmation request. So in case of positive confirmation request, the responding party has to respond in both the situations, whether he agrees or doesn't agree. Whereas in case of negative confirmation request, the responding party has to respond only if he doesn't agree with the amount. If he agrees with the amount, he need not respond. That is a negative confirmation request. Generally you will use this negative confirmation request if there are large number of small transactions. Understanding? Or if you feel that the risk of material misstatement in that area is very less, in those kind of situations you will use a negative confirmation request. But most of the situations you will use a positive confirmation request only. Got it? So first one is positive confirmation, negative confirmation. Third one is blank confirmation request. So in case of blank confirmation request, generally blank confirmation request is a type of positive confirmation request. Here what will happen is, generally in case of positive confirmation, you are mentioning this amount of 2 lakhs and sending to the data. Now what is the guarantee that he will actually verify this 2 lakhs from his books of accounts and he will respond? There is a possibility that debtor might respond to you without proper verification. To avoid such a possibility, what you will do is, you will not mention this amount, you will just keep a blank, and you will ask the debtor, you fill how much amount has to be given by you to the company. So in this situation, to fill this amount, he will have to compulsorily verify the books of accounts of him, and he has to respond. So to avoid the possibility that debtor or the third person might respond without properly verifying, to avoid that thing, you will use a blank confirmation request wherein the person has to fill that blank. Got it? Yes. Those are the three types of confirmation request: positive, negative, blank confirmation request. Next, management's refusal to allow the auditor to send external confirmation. See, auditor wants to send external confirmation to a particular debtor, but management is saying that, auditor, you should not send this external confirmation to that debtor. Now you will ask the management, what is the problem? You will ask the reasons, correct or not? Now management will say reasons so and so, so and so, so and so. Now if auditor feels that yes, the reasons given by the management are valid only, then you will see whether you can obtain audit evidence through alternate audit procedures. If you feel that you cannot obtain audit evidence through alternate audit procedures also, then you will show your impact on the opinion. You will modify your opinion. If it is possible to obtain audit evidence through alternate audit procedures, you will obtain the evidence and you will give the normal opinion. Got it? Yes. See, inquire reasons for management's refusal and seek evidence as to that refusal. Next, evaluate implications on ROMM. So now management is not letting me to send external confirmation. So why management is not letting? Are there any frauds? So if there are frauds, then the ROMM will increase. So this will, because of this situation, I have to reassess ROMM for the entire entity. Correct or not? So what impact this situation of management not allowing me to send the external confirmation will have on the entire ROMM of the entity. You need to reassess that entire ROMM. Next, perform alternative procedures to obtain audit evidence. So in order to obtain audit evidence, you need to see whether I can perform any alternate audit procedures. So if you are able to perform alternate audit procedures and you are able to get the audit evidence, then that is fine, well and good. If you are not able to perform alternate audit procedures, then see, if auditor concludes that management's reason is unreasonable and not able to obtain sufficient appropriate audit evidence from alternate procedures, then communicate with those charged with governance and determine implications of the auditor's opinion. Got it? Yes. Next, now with respect to external confirmation, you need to consider certain factors. Okay, now to send the external confirmation, you will design the request, confirmation request, correct or not? So you need to consider certain factors in designing the confirmation request. So what factors you have to consider? See, first of all, assertions that are being addressed. So to get the evidence about which assertions you are sending the external confirmation, you need to consider the assertions being addressed. Because if you are addressing assertion of valuation in the external confirmation request, you will ask about whether amount is correct or not. If you are addressing assertions of existence, then you will ask whether this is actually present with you or not, correct or not. So the way you will design the wordings of the request will change based on the assertion being addressed, correct or not? Yes. Next, identified ROMM. So if the ROMM of that particular area where you are requesting the external confirmation is more, then the way you will design the request will be different, correct? Next, layout and presentation. So you should also focus on layout and presentation of the external confirmation request. So you have to neatly design it so that the party to whom you are sending it, by just seeing it, he should get a feeling that he has to respond to that request in such a manner. You have to design the layout and you have to present it in such a manner. Got it? Yes. Next, you should also see the prior experience. So in the previous years also, you would have sent the external confirmation request. So for that external confirmation request, whether you received the response or not, if you haven't received the response for them, then you need to change the designing, correct or not? So your previous experience also should be considered in designing the external confirmation request. Next, method of communication. Method of communication means how you are communicating. Are you sending the request through mail or are you sending it through the post? So that also you need to consider for designing the confirmation request. Next, management's authorization. Is management willing to give the authorization to you to send external confirmation? You need to see that also, is management authorizing me? Next, ability of the intending confirming party. So you are sending the external confirmation request to accountant, let's say. Now accountant of that organization is not at all having the information that you are asking for, or accountant is not permitted to disclose that information, then what is the use of sending the request to accountant? So you have to send the request to such a person in that organization who is having the information and who is having authority to share that information. Getting it? Yes. So that factor also you need to consider. Next, auditor shall maintain control over external confirmation procedures. See, auditor, he should not assign the task of external confirmation to some other person. Okay, in this external confirmation procedure, there will be certain tasks like determining the information to be confirmed. So for which information we have to send external confirmation? Okay, should we ask about amount, should we ask about existent, which information, that needs to be decided by the auditor. He himself, he should not assign this task of deciding the information to be confirmed. Okay, next, selecting the appropriating confirming party. There are 1,000 debtors in the entity. Of these 1,000 debtors, to whom we should send the external confirmation request, that should be selected by the auditor only. He should not assign this task to internal auditor or any other person. Understanding? Next, designing confirmation request. So the confirmation request should also be designed by the auditor only. He should not assign this task. Again, this confirmation request, it should be designed on the letterhead of the auditor or the letterhead of the management. It should be designed on the letterhead of the management. Why? Because that third party, he doesn't know who the auditor is, but he is having relationship with the management, so he knows about the management. So there is a high chance that he will respond if you give the request on the letterhead of the management. Understanding? Next, sending the request including follow-up request. So auditor, he himself has to send the request, and the follow-up request should also be made by the auditor, he himself. He should not assign this task to any third party. Understanding? Yes. So basically about this we will be seeing in SA 16, using the work of internal auditor. So they can ask you a question linking SA 5 not 5 and SA 16. How in SA 16 there is a concept of direct assistance. Now they will ask whether auditor can use, that is the statutory auditor can use direct assistance of internal auditor as per SA 16 with respect to these particular aspects of the external confirmation. Like this they will ask. Now the answer is he should not use the direct assistance of internal auditor, because these on these things the statutory auditor should exercise complete control. He himself has to perform these things. Getting it? Yes. Next, now negative confirmation request, positive confirmation request, which is more reliable? Of course positive confirmation request is more reliable, because in both the situations you will get the response, correct? So positive confirmation is more persuasive than a negative confirmation request. Positive confirmation provides more persuasive, more believable audit evidence than the negative confirmation request. So there are, you cannot use negative confirmation request in all the situations. Only in the following scenarios you can use negative confirmation request. So what are the scenarios in which you can use negative confirmation request? We will see. See, negative confirmation provides less persuasive audit evidence, right? And you shall not use this as a sole audit procedures unless all the following situations are present. What are they? Romum of the area is low and controls are operating effectively. So in order to use negative confirmation request, Romum of the area should be less and the controls around that area should be operating effectively. Next, large number of small homogeneous populations. Okay, in case the items are huge, like thousands or 10,000 number of items are there, and all of them are homogeneous and small amounts like 100 rupees, 200 rupees. For example, there are 10,000 debtors in the organization, 10,000 number of debtors, and each debtor's value is 150, 160, 200, like this small amounts are there. In this situation you can use a negative confirmation request, because if you send a positive confirmation request for all the 10,000 small debtors, you will get a response from all of them. Now you have to open each request and check whether they have agreed or not, correct? Now in this situation, if you use a negative confirmation request for all the 10,000 debtors, only those debtors who don't agree with the balance, they will respond you back. So it is sufficient if you just check the responses that you got. Understanding? So in this situation also, where the number of debtors or the number of items are more and the value is small, in that situation also you can use negative confirmation request. Next, very low exception rate is expected. Exception rate means misstatements, the number of misstatements expected are very less, then also you can use the negative confirmation request. Not aware of the circumstances that cause recipients to disregard the request. So auditor does not have anything to believe that if I send a request to the third party, he will take that request and throw it in the dustbin. Understanding? Throwing it dustbin means not considering that request, not at all looking at that request. So auditor doesn't have anything to believe that the third party will not consider his request, the third party will disregard his request. In that situation also you can use negative confirmation request. Understanding? So only if all these situations are present, you can go with negative confirmation request. Otherwise you should always use positive confirmation request only. Got it? Yes. Next, now once you have got the responses, see, external confirmation procedure doesn't end by just sending the request. It will end only after you evaluate the responses that you have received. So external confirmation procedure involves two parts. First part is sending the request, second part is the second part is the responses that you have received, they should be analyzed. That is the second part. Only if you analyze the responses, the complete external confirmation procedure gets completed. Understanding? So evaluation of evidence obtained, how you will evaluate? When evaluating results of individual external confirmation, auditor has to categorize the responses into following categories. What are they? First one, a response indicating agreement without exception. So you have got responses. So in these responses, how many are the responses for which there is no disagreement? The third party have agreed with the amount. That is response indicating agreement without any misstatement. Next, response is deemed unreliable. So first category is this one. Second category is you have to category all those responses on which you don't have belief. They are agreeing only, but on that response you are not having belief. That you will categorize into second one. Next, non-response. So for some of the debtors, you have sent the external confirmation for 1,000 people. Some 800 people responded, 200 not responded. So you have to categorize the identify the non-responded people. So for non-responded people, what you will do? You will send a follow-up request, correct or not? For the second category, what you will do? You will perform further audit procedures to get confirmation, correct or not? For the first one, you can accept it without any further procedure. Finally, response indicating exception. Exception means in the books of accounts amount is showing as 20,000, but in the response that you received it is showing as 25,000. So there is an exception. In this situation you need to identify which is correct, whether amount showing in books of accounts is correct or the amount showing in the received in the response is correct, or both are wrong. That you need to identify. Okay, this is the fourth categorization. Like this, you need to categorize the responses and perform the respective procedure that is relevant for each of the category. Got it? Yes. Next, moving to essay 510. So this essay 510, it deals about opening balances. See, opening balances of current year, they come from the previous year closing balance, right? So what procedures the current year auditor should perform with respect to opening balances of the current year, that too in respect of initial audit engagement, not with respect to recurring audit engagements. So what is this initial audit engagement and recurring audit engagement? See, if the audit for the first year is done by Mr. A and audit for second year also done by Mr. A, then the second year audit will be recurring audit for Mr. A because in previous year he only done. Next in third year, let's say Mr. B has been appointed as auditor. Now for Mr. B, the third year audit will be initial audit engagement. Now in this initial audit engagement, the closing balances of second year will be the opening balances of third year, correct or not? Now the opening balances, they will have impact on the closing balances of third year, correct or not? So Mr. B has to perform certain procedures with respect to these opening balances which have come from the closing balance, correct? So from this aspect, SA 510 will be dealing. See, SA 510 initial audit engagement with respect to opening balances. First of all, what is meant by an initial audit engagement? An engagement where financial statements of previous year were not at all audited or audited by predecessor auditor. That means apart from current year auditor, some other auditor has audited the previous year financial statements. We'll call him as a predecessor auditor. Now the predecessor auditor should be an auditor from other firm, not within the firm of chartered accountants of current period. Understanding? See, predecessor auditor means auditor from a different audit firm who audited financial statements in prior period and who has been replaced by the current auditor. Understanding? So in those two situations you will call the current period audit as the initial audit engagement. Now what are the objectives of auditor with respect to opening balances of the current year? See, first of all, he needs to obtain sufficient appropriate audit evidence that opening balances do not contain misstatements that affect the financial statements. So the current year auditor, the for the initial audit, he needs to obtain audit evidence that opening balances that have been carried forward from the previous year do not contain any misstatements. This is the first objective of the current period auditor. Next, whatever the accounting policies that are reflected in the opening balances are consistently applied in the current period financial statement. So in the opening balances, whatever the accounting policies are being reflected, the same accounting policies should be followed in the current year also. If at all there is any change in the accounting policies of current period, then such a change should be properly accounted for in the books of accounts. Got it? So this is the objective of a current period auditor with respect to initial audit engagement, right? Yeah. Now, what audit procedures the current period auditor should perform with respect to opening balances? Let us see. First of all, he needs to check that whether the closing balances of previous year have been correctly brought forward to the current year or not. Okay, the current year opening balances, they should match with the closing balances of previous period. It should not be that in the current year opening balances, whatever figures you wanted, you just brought them and kept them. No, they should match with the closing balances of last year, right? Determine whether closing balances are correctly brought forward. Next, determine whether opening balance reflect appropriate accounting policies. So whatever the opening balances, in opening balances, whatever the accounting policies that have been used, are they correct? See, the first requirement is whatever the accounting policies reflected in the opening balances, that should be followed in the current period. Before that, you should first of all check whether that accounting policies followed in the opening balances, are they appropriate, are they correct? First of all, if they are correct, then they should be followed again similarly in the current period also. Okay, if a prior period financial statements are audited, once peruse those financial statements. So if at all the last periods, the previous years audited financial statements have been audited, once go through, peruse means just once reading the financial statements. Next, evaluate whether current period audit procedures provide evidence relevant to opening balances. So, sometimes what happens is while you are performing audit procedures related to current period, they will provide you audit evidence about opening balances. Like, let's say, for example, during the year, amount has been received from debtors. Now, while performing audit procedures on these transactions, you will get evidence about existence of debtors in the opening balance. Only if debtors are present in the opening balance, the amount will be received during the year, correct or not? So, in some situations, performing audit procedures on current period transactions will give you audit evidence about the opening balances. Understanding? So that also you have to see whether the audit procedures that I perform on current period transactions, do they provide me any evidence about the opening balance. Next, reading most recent financial statements and predecessor audit report, if any. So if there is any most recent audit report available, once go through it. These are the audit procedures that you will perform with respect to opening balances. Next, another thing that you need to ensure is there should be consistency in the accounting policies. So you need to obtain sufficient appropriate audit evidence about whether accounting policies reflected in the opening balances are consistently applied in the current year. This point we have already seen, right? In the objective itself we have seen it. So if at all there is a change in the accounting policy, whether they are properly accounted for and disclosed. Let's say, for example, in the previous year, you have provided depreciation by following written down value. In the current year, you are following SLM method. Is it proper? No. Whatever the procedure, whatever the accounting policy you have followed in the previous year, same thing should be followed in the current year also. If in case you wanted to change the accounting policy, then you have to properly account for it, right? So let's say you want to change from WDV to SLM for this year, then the requirement is that you need to make adjustment of what would have been the depreciation if SLM has been followed uh, retrospectively. Okay, from the beginning itself, if you have followed SLM, what should have been the value of the asset and what should have been the depreciation, that effect you give now and follow SLM. Understanding? So the basic requirement is you need to follow accounting policy consistently. If at all you want to change the accounting policy, then properly account for that change. Getting it? Yes. So that's what the auditor will see with respect to accounting policy. Next, audit reporting. So there are certain situations, and in each of that situation how the auditor will report. Let us see. So situation number 1, unable to obtain sufficient appropriate audit evidence regarding opening balances. So regarding opening balances, auditor is not able to obtain audit evidence. That means if audit evidence is not available, you will give either qualified or disclaimer based on the pervasiveness of the matter, right? So qualified or disclaimer. Next, concludes that opening balance contain misstatements. So concludes means evidence is available. There is a evidence available that in the opening balance there is misstatement that materially affects current period financial statements and effect is not properly accounted. So there is a evidence and the misstatement is material, and you don't know whether it is pervasive or not pervasive. Since the evidence is available, you will give either qualified or adverse based on the pervasiveness of the matter. So see, qualified or adverse. Next, predecessor auditor opinion includes a modification. So in the previous year auditor has given a modified opinion, whatever it might be, qualified, disclaimer or adverse. and it remains material to current period financial statements. So that matter is very much material for the current period financial statements also. In such a situation, you will modify the current period financial statements also, or current period opinion also you will modify, right? Yes. So this is a discussion of essay 510. Next, moving to essay 520, which is with respect to analytical procedure. So, if you remember, I told you that analytical procedure can be used as both. So, analytical procedure, it can be used as both risk assessment procedure as well as further audit procedure, right? So risk assessment procedure you will use for identifying and assessing the risk. Further audit procedure, as a response to that risk assessment procedure, you will design further audit procedure. Now we will see how you can use analytical procedure as risk assessment procedure first of all. So see, so one of the analytical procedure is trend analysis. So, in the past 5 years, the revenue of the company is growing at a constant rate of 5%. Now, suddenly in the current year, revenue has grown at 8%. This is nothing but you are doing a analysis of the trend. In the past 5 years, it is growing at 5%, but for the current year, it has grown at 80%. So, there are two possibilities. Firstly, it could have been a genuine increase, or there could have been a fraud committed here. Correct or not? From these two things, anything would have happened. So you have identified the risk here. Correct or not? Risk of material misstatement you have identified. How did you identify? By performing a analytical procedure. So this is how you can use analytical procedure for identifying the risk. Got it? Next, how you can use analytical procedure as a substantive procedure. Okay, substantive procedure is one of the further audit procedure, detailed procedure. So let's say, for example, in the P&L statement, I guess I told you this while discussing SA 315. So in the P&L statement, there is salaries. Now you wanted to obtain audit evidence about the salaries and you wanted to use analytical procedure. So what you will do? You will ask the management how many number of employees are there and how much average salary you are giving to them. You will multiply. So let's say 100 employees, on an average you are giving 10,000 salary into 12 months. How much it will become? 1 lakh, 10 lakh, 1 crore, 20 lakh, right? 1.2 CR. So now you will see, based on your analysis, 1.2 crore should be present in the P&L. So in the P&L, in the salaries, actually how much it is there? If it is 1.2 crore only, then it is fine. Your analysis is correct. If it is 1.1 crore or 1.3 crore, you will investigate why the difference has occurred between your expectation. So this 1.2 crore is your expectation. How you are expecting? Based on certain analysis you are expecting, and this is the actual figure. You will compare the both and see whether there is any difference. If there is a difference, you will investigate the difference. Understanding? Yes. So this is how you will perform analytical procedure. Let us see this essay 520, which is exclusively dealing with analytical procedure. See, meaning of analytical procedure. Evaluation of financial information through analysis of plausible relationship among both financial and non-financial data. So if you see, in our example, number of employees is non-financial data, average salary is a financial data, and there is a relationship between these two. We have used that relation to perform analytical procedure. So they are giving the meaning of analytical procedure as a evaluating the information through analyzing the plausible relationship between financial and non-financial data. So that means in order to perform analytical procedure, a relationship should exist. between financial and non-financial data or two financial data. Only then you can perform analytical procedure. And investigation to identify fluctuations or relationships that are inconsistent with other relevant information. So this is nothing but a trend analysis, right? Yeah, types of analytical procedure. Comparison of client data with industry data. So in case of this analytical procedure, you can compare data of the client, sales of the client, with the data of the industry. Industry means like let's say entity is in the car manufacturing. Okay, is car manufacturing. Now all the companies that manufacture the car taken together, you will call it as an industry. So comparing the company's data with industry data, or comparing the company data to similar prior period data. So current year data of the company you are comparing with the prior period. That is also an analytical procedure. Next, client determined expected results. Expected results means budgets. Okay, client would have prepared a budget and he has arrived at certain actual amount. Now comparing the actual amount with the budget is also an analytical procedure. Next, auditor determined expected results means, see, in our example, by multiplying average salary and the number of employees, auditor has expected a certain amount. That is auditor determined expected results. You will compare with the actual figure. This is also an analytical procedure. Next, expected results using non-financial data. So this is nothing but projection. Expected results means how much expectation the company has made, projection it has made. You will compare the projections with the actual data. So all these are the different analytical procedures. Now what is the objective of this analytical procedure? Simple: obtain relevant and reliable audit evidence when using substantive analytical procedure. Okay, see, for whatever the audit procedure, the objective is to obtain audit evidence. Similarly for analytical procedure also you will have the same audit, same objective. Next, purpose of analytical procedure: use comparisons and relationships to assess reasonableness. So reasonableness means you have expected that 1.2 crore should be the reasonable amount of salary based on your calculations, average number of employees and average salary. So the reasonably it should be approx 1.2 crore. So you have arrived at a reasonable amount that should be there in the P&L. If it is exceeding or below it, you will investigate, right? So that is one of the purpose, to expect a reasonable amount. Next, interfirm and intrafirm comparison. So with the help of this analytical procedure, you can compare the performance of your firm for the current year with last year, and you can also compare the performance of your firm with another firm. That is interfirm, intrafirm. Okay. Next, independently verify the correctness of some of the items of expenses. Just like I have explained you about how to perform analytical procedure on salaries, you can also perform analytical procedure on various expenditure items of the P&L. You can perform analytical procedure on rent, on electricity, on purchases, like this. On almost all the P&L items you can perform analytical procedures. Next, factors to be considered for a substantive analytical procedure. See, if you want to perform analytical procedure, there should be certain factors that should be there. What are they? Let's see. First of all, availability of data. So data should be there with the organization. Without data, you cannot perform analytical procedure. If you see our example, for that verification of salary expenditure through analytical procedure, we required data such as the number of employees, average amount of salary you are giving, correct? So this data should be present. Only if the data is there, you can perform analytical procedure. Otherwise it is not possible to perform analytical procedure. Next, disaggregation. Disaggregation means, okay, data is available, that data, but that data is segregated to various areas, so that is present in lot of areas, then it takes time to collate all that data. So if the data is highly disaggregated, then also it is not possible to perform a analytical procedure. Next, account type. So what is the type of account on which you want to perform analytical procedure? If you want to perform analytical procedure on balance sheet item, it's quite impossible to perform analytical procedure on balance sheet. Once check fixed assets, liabilities, once see whether you can perform analytical procedure on any of those items. You cannot perform. But on P&L items, it's quite easy to perform a analytical procedure. So you should also consider what is the type of the account on which you want to perform analytical procedure. Next, what is the source from which the data has been extracted and the reliability of that source. Next, there should be a predictability. So only if the amount can be predictable, you can perform analytical procedure. If you can't predict the amount, you cannot perform a analytical procedure. Got it? You can just take the example, even in that sales trend or in the salaries expenditure, you should be able to predict the amount. If you are not able to predict the amount, you cannot perform a analytical procedure. Clear? Next, nature of assertion that you are going to address. So if you want to address assertion like existence, it's impossible to perform analytical procedure for existence assertion. But if you want to address assertion like valuation or the accuracy, you can perform analytical procedure. So which type of assertion you want to address, that also you need to consider while using the analytical procedure. Next, inherent risk or what can go wrong. So all these things you need to consider in determining whether you can use analytical procedure for that area or not. Clear? Yes. Next, techniques available for analytical procedure. This is simple. Trend analysis, ratio analysis, reasonableness test. Reasonableness test means that salaries example you can take. Okay, the test we have performed, average salary multiplied by number of employees, that is nothing but a reasonableness test. Next is structural modeling. See, structural modeling is a advanced version of reasonableness test. Here in this structural modeling, you will develop a custom formula for establishing the relationship between the items. That is structural modeling, which is quite complex. Got it? Yes. Next, steps in performing analytical procedure. So what are the steps that are involved to perform analytical procedure? Let us see. First of all, you will determine suitability of particular substantive analytical procedure. So for the assertion, for the item that I am going to audit, is analytical procedure suitable? Can I use analytical procedure in this situation? You will check that first of all. Next, evaluate the reliability of data from which expectation is developed. So once you got an idea that yes, in this situation I can perform analytical procedure, now you will check whether the data is available. Because for performing analytical procedure, the first thing that you require is the data. Without data, you cannot perform analytical procedure. And that data should also be reliable. If you don't have reliable data, the expectation that you make based on analytical procedure will be wrong, will not be reliable. So the data that is available, is it reliable or not, also you will see. Correct or not? See, that's what you are saying, reliability of the data. Once you felt that yes, data is available and even that data is also reliable, now you will develop a expectation. How will you develop a expectation? Just like multiplying average salary with number of employees, you will arrive at certain amount. That amount is nothing but a expectation that you have made. Getting it? Yes. So that's what, develop an expectation of recorded amounts. This is the third step. After you have developed an expectation, determine the amount of any difference of recorded amounts from the expected values. So you have expected that salary expenditure should be 1.2 crores, but actually in the P&L statement it is also 1.2 crore only. Then there is no difference between expected amount and the actual amount. If at all there is any difference, you will investigate it further, right? That is the fourth step. Okay, determine the amount of difference of recorded amount from the expected values that is acceptable without further investigation. Got it? So this is a analytical procedure, steps involved in analytical procedure. Got it? Yes. Next, investigating results of analytical procedure. Just like this external confirmation procedure doesn't get completed by just sending the request, you should analyze the request responses received, correct? Just like that, in case of analytical procedure also, you need to analyze the results. How you will analyze? See, if analytical procedures identify fluctuations, so after performing analytical procedure, if you have identified any fluctuations, inquire with the management. Management, I am getting a difference. I got that actually your salary should be 1.2 crore as per my expectation, but in your financial statements you are showing 1.5 crore. What is the reason? You will ask with the management, because management is the one who will have complete information about their entity. So you will first of all ask the management. Next, perform other audit procedures. Based on the responses given by the management, you will perform certain other audit procedures also. Got it? Yes. So that was essay 520. So next, essay 530, audit sampling. So audit sampling. Why will auditor use sampling? See, in case of large companies where there are thousands of transactions, it becomes difficult for the auditor to audit each and every transaction. So auditor chooses to go for sampling. So under sampling, what happens? Let's say there are thousand population. Population means total number of items. Now, since he cannot test all the population, he will take a sample of 100 items and he will perform audit procedures on these 100 items. And let's say, based on his audit procedures, he found out that there is one misstatement in this 100 sample. Now, he will project this misstatement to population. That is, in 100 number of sample there is one misstatement, then in 1000 numbers how many misstatements will be there, like this he will cross multiply. So in how he will cross multiply? 1000 divided by 100 multiplied by 1, so 10. So like this, in sample of 100 there is one misstatement, then in total 1000 population there can be 10 misstatements. Like this he will make a guesswork. Now, because of this sampling, there is a sampling risk, correct or not? Why this sampling risk arise? Because you have not performed audit procedures on complete population, but you are telling that there will be 10 misstatements in the population, which is not correct, right? Just based on sample you came to this guess. So in the population there can be more than 10 misstatements or less than 10 misstatements possible, right? So you will call it as sampling risk. Understanding? Yes. So what is meant by sampling? Application of audit procedures on less than 100% of entire population is known as sampling. Clear? See, audit sampling. Application of audit procedures to less than 100% of items within a population of a audit relevance, such that all sampling units have a chance of selection. This is the concept of sampling. So what is meant by population? I told you, the entire data set on which auditor has to frame a opinion is known as population. You will take sample from the population, right? Next, sampling risk. Risk that auditor's conclusion based on a sample may be different from the conclusion if entire population was subjected to same audit procedure. So what they are saying, the risk that auditor might reach a different opinion by performing audit procedures only on 100 items instead of performing the procedures on complete items. Such a risk is known as sampling risk. Next, anomaly. What is meant by anomaly? So let's say for example, in this sample of 100, let's say you have found five misstatement. Of these five misstatements, one misstatement is such that it is very rare, it will not be there in entire population. Okay, you have found a particular misstatement in the sample, and that misstatement is very rare that it is found only in the sample. If you search entire population, such a kind of misstatement for sure you will not find in the entire population. So such a type of a misstatement is known as anomaly. Understanding? So the misstatement which is found only in the sample, but for sure 100% it will not be there in the entire population, will be known as anomaly. Now when you project the misstatement to the population, you should exclude this anomaly. So there are total 5 misstatements in 100 items. Now, of that five, one is an anomaly. So, while projecting, you should consider only four misstatements. So, you should say that in a sample of 100, there are four misstatements. Then, in a population of 1,000, how many misstatements will be there? 40. Like this. So, while projecting the misstatements from sample to the population, you have to exclude anomaly, because such a type of misstatement for sure 100% it will not be there in entire population. Got it? Yes, that is a concept of anomaly. Next, tolerable misstatement. Tolerable misstatement means if that misstatement is till that level, it is okay to the auditor. It will not impact the opinion of the auditor. Like, see, for every audit, auditor will keep a tolerable level of misstatement. Like, let's say 1 lakh rupees. That means even until and unless misstatement crosses 1 lakh rupees, auditor will not be concerned with that. Okay, so if misstatement is less than 1 lakh rupees, it is okay to the auditor, is known as tolerable level of misstatement. See, a monetary amount set by the auditor in respect of which auditor seeks to obtain appropriate level of assurance that the monetary amount set by the auditor is not exceeded by the actual amount. So he will always ensure that the actual misstatement will not cross this tolerable level of misstatement. Clear? Yes. Next, characteristics of population. So what characteristics should be there in the population? See, from the population you are selecting the sample, right? So the population should be appropriate. So if you want to perform audit procedures on sales, then your population should be sales, right? Since you want to obtain audit evidence about the sales, your appropriate population would be sales invoice. So that is the first character. Next, completeness. So you want to perform audit procedures on sales, there are certain 1 lakh number of sale transactions, and you wanted to take out a sample from this. Now, while taking out the sample, you should consider complete 1 lakh number of sales transactions. You should not just consider only 50,000 number of sales transactions for the purpose of selecting sample. If you consider only 50,000, what will happen? You are neglecting, you are ignoring the remaining 50,000 sales transaction. Correct or not? So another characteristics of sample is that another characteristic of population is that it should be complete. Clear? Yes. Next, reliable. Of course, you are taking sample from the population. If population itself is not reliable, how can you rely on this sample? Correct. So the population should be reliable for the purpose of auditor, right? These are the characteristics of population. Next, approaches to sampling. See, broadly speaking, there are two types of sampling, broadly speaking. One is statistical sampling, another one is non-statistical sampling. Again, in statistical sampling there are further types of samplings, in non-statistical also further type of sampling, but Broadly there are two, statistical and non-statistical. Now what is meant by statistical sampling? See, statistical sampling will have certain features. So what are the features of statistical sampling? First of all, there will be randomness. Random selection will be there in case of statistical sampling, and you will use scientific formulas in case of statistical sampling. See, statistical sampling has a random selection and use of probability theory, and it is more scientific when compared to non-statistical sampling, because statistical sampling is based on certain statistical formulas and it is widely used when compared to non-statistical sampling. So statistical sampling is having a reasonably wide range of application, and there will not be any personal bias in case of statistical sampling. Some of the advantages of these statistical sampling: see, sample size does not increase in proportion with population size. So let's say for example, there is 1,000 population, you are taking a sample of 100. Now if population size increases 10x, 10 times to 1 lakh, now sample size also will not increase 10x, it will increase either 2x or 3x. Okay, it might become either 200 or 300. So that is one advantage. So sample size will not increase with the same rate as the population size increases. So because how this becomes an advantage to you, because you need not perform audit procedures on more items. Correct. Even though the population increases rapidly, you can perform audit procedures only on some of the items. Some of the sample size will not increase at the same ratio. Understanding? Yes. Next, sample selection is more objective, means, so objective means based on facts. So sample selection will not involve any biasedness. Based on the facts, based on the formula, you will select the sample. So less biasness, less not, almost zero biasness will be there while sample selection in case of statistical sampling methods. And means for deriving a calculated risk. So with the help of statistical sampling, you can arrive at a calculated amount of risk, because it is completely based on formula. So if I wanted to test these many number of samples, how much risk I will be taking, you can fix the risk. In order to reduce the risk, how much sample size should be increased, like this a calculated decision you can make with the help of statistical sampling, since it is completely based on formulas and better description of large mass of data. So by using statistical sampling, you can get a clear idea of huge population by performing audit procedures on just some of the sample. Getting it? Yes. Next, estimating a minimum sample size associated with the specific risk and precision. So you can say I wanted to take this much amount of risk. So for taking this much amount of risk, how many transactions, how much sample I should select? So this kind of decision making can be done with the help of statistical sampling. On the other hand, non-statistical sampling is non-scientific. It involves personal bias, personal knowledge and judgment of the auditor. See, personal experience and knowledge of auditor is required for non-statistical sampling. Generally non-statistical sampling is not used that much. Okay, it is not widely accepted. Next, sampling methods. So here we will be seeing some of the statistical sampling methods and also non-statistical sampling methods. So firstly, random sampling is a statistical method. So this is of two types. First one, simple random sampling. Simple random sampling means, see, there will be random number generators. If you go to the Google and type random number generator, a interface like this will come. Let's say your total population is 1000. So minimum is 1, maximum you set to 1000, and once you click on generate, it randomly generates a number. So you will pick that item into sample. Again, once you click generate, it randomly selects, you will pick it again, like this. How many items you wanted to include into the sample, that many times you will click generate and you will pick that item into the sample. That is nothing but a random sampling, for which you will use this kind of random number table generator. Got it? Yes. So this is simple random sampling. So what we have seen there is a simple random sampling. Now stratified random sampling. Now what is meant by stratified random sampling? Let me tell you. So let's say there is a population of 1,000. Now you will divide this 1,000 population into strata, or you will call it as a stratum. Now each stratum you will divide it in such a way that it has 200 items. Okay, 200 items, 200 items, 200 items, and 200 items. So, and another feature of this stratified random sampling is, see, you will call this as strata or stratum. Now, all the items of this stratum will have similar features. Same characteristics will be there in all the items of the strata. Getting it? Now, you have divided the population into strata. Now from each strata, randomly you will select some of the items. So from this strata, from 5 items randomly you will select. From this strata, another 5 you will select, another 5 you will select, another 5 you will select. Now total 25 items you have selected into sample from 1,000 items. So this is a stratified random sampling, wherein first of all you have divided the population into strata such that all the items of same characteristics are brought into a single strata. Now from the strata you have applied random sampling. Getting it? This is a stratified random sampling. Got it? Yes. So what is the use of this stratified random sampling? You can avoid a situation where the items of same characteristics will get selected into the sample. Understanding? If you do stratified random sampling, you will have items from all the characteristics into your sample. Clear? Yes. Next, interval sampling or systematic sampling. So what is this interval sampling? Let me tell you. Let's say again, same 1,000 population is there and you wanted a sample size of 50. Okay, sample size is 50. Now what you will do is, you will first of all select sampling interval. So sampling interval will be 1,000 divided by 50. So 20 is the sampling interval. So from this 1,000, every 20th item you will take into sample. So this is nothing but a interval sampling or a systematic sampling you can call. Got it? Yes. So that is interval or systematic sampling. Next, monetary unit sampling. See, monetary unit sampling is a very complex selection process. I will just tell you briefly. So let's say there are these kind of items in the population. One item value is 1 lakh rupees. Another item value is 2 lakh rupees. Okay, another item value is 500, another item value is 1,000 rupees, another item value is some 50,000 rupees. Now if you are using monetary unit sampling, the chance of selection of a higher value item into the sample will be more, and the chance of selection of lower value item into the sample will be less, because you will consider the value of the item also if you are using monetary unit sampling. Got it? This is briefly how the monetary unit sampling will look like. Here you will give importance to the value of the item. Clear? Yes. Next, haphazard sampling means, haphazard means no structured technique you are following. You will call it as haphazard, as you wish. You will select the sample. This is non-statistical sampling. Next, block sampling. Block sampling means, let's say there are sales invoices. Sales invoices will be there in each and every month, correct or not? So every year will have 12 months. Every month will have sales invoice. Now, in the first month, you have selected block of sales invoice from 1st to 10th date. So, all the transactions that has taken place between these two dates will be selected into sample. Same with the second month also. In second month also, 1st to 10th. Third month also, 1st to 10th. So here you are selecting a block of continuous items into the sample. This is nothing but a block sampling. Getting it? Yes. So this is block sampling. So all the sampling methods we have discussed. Next, moving to steps in audit sampling. There are 5 steps in applying this audit sampling. Once we discuss these 5 steps, this standard gets completed. Let us see the 5 steps. So the first step is sample design, size and selection. So while designing the sample, you have to consider the purpose for which you are making the sample. Okay, purpose of procedure and characteristics of the population. So in designing the sampling, you need to consider these 2 things. Next, sample size. Sample size means how many items should be there in the sample. So sample size should be selected in such a way that overall sampling risk will be reduced to a acceptable level. Got it? Yes. Next is sample selection. Now, while selecting the sample, you need to select it in such a way that each and every item of the population is having equal opportunity of being selected into the sample. So these rules you need to follow with respect to sample design, sample size and sample selection. So now you have selected the sample by following these rules, right? Yes. See, once you have selected the sample, the next step is you will perform your audit procedures on the sample, correct or not? So, performing the audit procedures. So, perform audit procedures appropriate for the purpose on sample, not the population. Okay. Now, if audit procedure is not applicable to the selected item, perform procedure on replacement item. What is this replacement item, sir? Let's say, for example, you are performing audit procedures on checks issued. So you have selected some 50 sample checks and performing audit procedures. So in that 50, there is one particular check which is cancelled check. Now, the audit procedures that you are performing are not applicable to this cancelled check. Then what will you do? You will replace this cancelled check with another new check and perform the audit procedures on that new check. So here, this cancelled check becomes a replacement item. Getting it? Yes. So during your audit procedures, if you find any item selected into the sample to which your audit procedures are not applicable, then you will call that item as a replacement item and you will remove that item from the sample and take a new item into the sample and perform audit procedures on that new item. Clear? Yes. Next, if you are unable to perform the procedure, see, for the selected item, procedure is applicable. Your procedure is applicable, but you are not able to perform your procedure on the selected item. In such a situation, you have to treat it as misstatement. Understanding? Yes, let's say, for example, debtors. So 100 debtors you have selected into sample and you are sending external confirmation. There is one particular debtor whose address management has not given. whose details management has not given. Now, for the selected debtor, the procedure of external confirmation is applicable, but you are not able to perform the procedure because you don't have address of that debtor, management has not given. Now you will treat this as a misstatement. Getting it? Yes. So there is a difference between the first situation and the second situation. If you are unable to apply the designed audit procedure, treat that item as a misstatement. Clear? Yes. Next. Now, after you perform audit procedures on the sample, so this is the sample. Now, on this sample, you have performed audit procedures. Once you have performed the audit procedures, you will identify what misstatements, correct or not? You have identified the misstatements. Now you need to evaluate those misstatements. See, evaluate nature and cause of deviations and misstatements that you have identified. See, identify misstatements having common features. That means from these misstatements you need to identify whether any of these misstatements are having common features. Like, let's say all the misstatements are being found only in the sales that are made to Mr. A. Now, what will you do? So, all these misstatements are having a similar characteristic. What is that characteristic? All of them belong to sales to made to Mr. A. Now, what you will do? You will go to the population and you will check all the sales made to Mr. A. Getting it? So, you have to evaluate whether the misstatements that you have identified, are they showing any common characteristic? Okay. Next, if auditor treats misstatements as anomaly, obtain higher degree of certainty that it is not a representative of the population. So, if any of the misstatement that you have found, if you feel that it is an anomaly means I told you that misstatement is there only in the sample, you will not for sure find it in the entire population. Now, you have to get 100% evidence, 100% proof that of course it is an anomaly. Like such a type of evidence you need to obtain with respect to anomaly. Okay. Yes. Next, projecting the mistake. So in the third step, what did you do? You have evaluated. See, once we will see all the steps. First of all, you have selected the sample. On the selected sample, you have performed the procedures. After performing the procedures, you identified the misstatements. So you have evaluated those misstatements. Once you have evaluated the misstatements, you will project these misstatements to entire population. So in the sample, there are 5 misstatements. So in the population, how many misstatements can be there? Like this, you will project the misstatements, correct or not? See, that is the fourth step, projecting the misstatement. So for test of details, project the misstatement. So test of details means account balances and transactions. For that, you will project the misstatements. Whereas with respect to controls, you need not project. See, for misstatements, see, with respect to amounts, you will call it as a misstatement. With respect to control, you will call it as a deviation. Now, misstatements will be measured in the terms of monetary amounts, but deviation in the control will be measured in terms of percentage. You will say that there is 5% deviation in the control, there is a 10% deviation in the control. You will not say that there is 1 lakh rupee deviation in the control. How can you give monetary value for the control? Understanding? So, in case of deviation in the control, you need not project the deviation to the population, because if you project the percentage will not change. Okay, in the sample of controls, you identified that there is a 5% deviation. If you project this 5% to the total controls, the 5% will be 5% only, it will not change, correct or not? So with respect to the controls, you need not project the deviation to the population, but with respect to the uh, amounts, that is the test of details, test of transactions, you have to project the misstatements to the population. Next, if there is any anomaly that you have found in the sample, you need to exclude that anomaly while projecting the misstatement from sample to the population. This point I have already told you while discussing the definitions, right? So exclude anomaly while projecting the misstatements. Clear? Yes, sir. And the final step is you will evaluate results of sampling. So I have performed sampling. That does sampling give me proper results, or should I perform more procedures, or should I include more items into the sampling? Like this, you will evaluate the results of sampling. See whether use of sampling has provided a reasonable basis for conclusions about the population. So this is how you will evaluate the results of sampling. Got it? Yes. That is essay 530. Now we'll move to essay 230. This is the last standard of this particular chapter, right? Yeah, which is nothing but audit documentation. See, this audit documentation, it is very easy and very important. Okay, so whatever the evidences that you have gathered, whatever the procedures that you have performed, all those things need to be properly documented. Why you should document? Because if you don't document, you cannot prove in the future that you have performed this work properly. So to prove to others, others means entity, various authorities, okay, to prove them that you have performed the work properly, you need to maintain documentation. See, if there is no documentation, it means that you have not done the work at all. Okay, so documentation is very very much important. See, audit documentation. So, what is the definition of audit documentation? It is record of three things. So, record of what three things? Audit procedures performed, audit evidence obtained, and the conclusions reached. So, audit documentation is record of PEC, procedures performed, evidence obtained, and the conclusions reached. Got it? Yes, sir. Got it. Next, what I told you, each and every standard has its objective. We are seeing those objectives till now. Now, similarly, what objective this SA 230 is having? See, the objective of SA 230 is prepare a documentation that provides a record of the basis for auditor's report, and audit was planned and performed in accordance with audit. So, the objective of SA 230 is to help the auditor to prepare the documentation that will help him to prove that audit was performed in accordance with standards on auditing, and to also provide a basis for the opinion that he has given in the audit report. So simply speaking, the purpose objective of SA 230 is to help the auditor to maintain documentation, right? Next, form, content, and extent of audit documentation. So you can get it out, sir. SA 230 is saying that every auditor has to maintain documentation, but in which format the audit documentation has to be maintained? Form. See, form, it can be either physical or of a soft copy. Okay, and content, what should be included in that audit documentation, and extent, how much audit documentation should be maintained. With respect to these two things, content and extent, you have to maintain that much amount of audit documentation which will enable a experienced auditor who is not associated with your audit to understand following these three things. What are they? Nature, timing, extent of audit procedures performed. So a experienced auditor who is not having any idea of your audit, he should be able to understand by seeing your audit documentation what procedures you have performed. He should be able to understand. And results of that audit procedures performed. So after performing that audit procedures, what results, what evidences you have obtained, that should be able to be understood by a experienced auditor who is not associated with your audit, and he should also be able to understand significant matters arising during the audit and the conclusions reached. So what conclusions you have reached should be able to be understood by that experienced auditor by just seeing the audit documentation. Now you got an answer to what should be the content of documentation, extent of documentation. So your audit documentation should be maintained in such a way that by seeing that audit documentation, a experienced auditor who is not having a prior connection with your audit understands these three things. Getting it? Yes, sir. Next, why audit documentation is required? There are a lot of benefits because of audit documentation, right? Let's see what are the benefits that you get because of audit documentation. First of all, it will assist the engagement team to properly plan and perform the audit, correct? So if you document the strategy, plan and the program, and engagement team also document whatever the evidences that they have obtained, it will help the engagement partner and also engagement team to properly conduct the audit, to properly plan the further audit, right? That is the best, one of the most advantage of audit documentation. Next, audit documentation will also help to direct, supervise audit work and discharge review responsibilities. Review responsibilities means the audit, it will be done by article assistance. So whatever the work that is done by the article assistance, it has to be reviewed by the engagement partner, correct or not? So what will the engagement partner review? The documentation that the engagement team has maintained, that only will be reviewed by the engagement partner, correct or not? So for doing that review, for giving a guidance, for directing, for supervising the engagement team, audit documentation is very much important, correct? Yes. Next, audit documentation also will help to fix accountability for the work. So once the article assistant, he has obtained the evidence, he will sign it that he has performed this work. So by signing, you are fixing the responsibility on that person who is signing it, to ensure that whatever the work that he has performed is correct only. In future, if any mistakes are found in his work, you will be able to identify who performed that work, and you can ask the person to rectify it, correct or not? So with the help of audit documentation, you can fix the responsibility, correct? Yes. Next, retaining record of matters of continuing significance. Of course, if you maintain the documentation, you can hold that documentation with you for the future also. Continuously you can retain it, right? Next, enabling the conduct of quality control reviews. So we have the concept of engagement quality control review that we will be seeing in which standard? SQC 1 and SA 220, right? So for the engagement quality control reviewer to do the engagement quality control review, he requires audit documentation. That is also one of the benefit or advantage of audit documentation. Next, enabling the conduct of external inspections. So who will do the external inspections? See, the people like NFRA, people like quality review board, people like peer review board, they will perform external inspections. So for doing that external inspection also, audit documentation is very much important. Got it? Yes. Next, factors influencing form, content, and extent of audit documentation. So, what factors will influence the form, content, and extent of audit documentation? Let us see. First of all, size and complexity of the entity. If the size of the entity is huge, then the amount of documentation will also be huge, correct or not? Next, nature of audit procedures to be performed. So if your audit procedures are mostly technology based, then the form of your audit documentation will be soft copies. If most of your audit procedures are manual procedures, then lot of your audit documentation will be manual in the physical copies, correct or not? So the nature of your audit procedure also impacts the form of your audit documentation. Next, identified romum. If romum is high, more documentation. If romum is less, less documentation, correct or not? Yes. Next, significance of audit evidence obtained. So if the evidence obtained is more important, you will preserve it in a more safety fashion, correct or not? Yes. Nature and extent of exception identified. So if there are more exceptions, more misstatements, then you will obtain more evidences. Next, need to document a conclusion and audit methodology and tools used. So all these things will impact form, content and extent of audit documentation. Next, now there are certain things that need not be kept in the audit documentation. So what are the things that need not be kept in the audit documentation? Let us see. Audit documentation need not include superseded drafts of working papers and financial statements. So before you prepare a final version of a financial statement or a document, you will be having various draft versions. Those draft versions need not be kept in the documentation file. Understanding? You can discard them. Next, notes that reflect incomplete or preliminary thinking. Certain working calculations you would have maintained, right? Which need not be kept in the audit documentation. Those are just preliminary thinking purpose. That thinking you would have kept in a final version. Okay, if that final version is available, that preliminary thinking and notes which are incomplete need not be part of audit documentation. Next, previous copies of documents corrected for typographical or other errors. So in the audit documentation, while preparing them, there can be some spelling mistakes. To correct those spelling mistakes, you would have prepared another correct version of document. When you have that corrected version of document, the previous document that contains spelling mistakes, it need not be kept in the audit documentation. Got it? Yes. Next, duplicates of documents also need not be kept in the audit documentation. If you keep the original documents, that is sufficient. So all these four things need not form part of audit documentation. Next, matters arising after the date of auditor's report. See, if new audit procedures performed or new conclusions are drawn after the date of auditor's report, auditor shall document the following. See, generally, once the audit report is issued, you will not perform any audit procedures. But if any circumstances have arisen because of which you have to perform audit procedures even after issuing the audit report, in such a situation, you have to document what are those circumstances because of which you are forced to perform audit procedures after issuing the audit report, and new or additional audit procedures that you have performed. So what are such new additional audit procedures that you performed after the date of audit report? You need to document, and when and by whom the resulting changes to audit documentation were made and reviewed. So these things you need to document. If at all you are making audit, or if at all you are performing audit procedures, some of the audit procedures after the date of audit report. Got it? Yes. Next, certain specific documentations as required by SA 230. So as per SA 230, every auditor has to mandatorily keep these particular documentations. So what are those documentations? Let us see. First of all, nature, timing, extent of audit procedures, and also record the following. So every auditor, this is very basic, right? So every auditor, he has to document what is the nature, timing and extent of audit procedure that he has performed. See, nature of audit procedure means whether it is external confirmation, whether it is inspection, whether it is observation, whether it is reperformance. So what is the nature of procedure you have performed? You need to document it. Next, timing. At what time you have performed that audit procedure? That also you need to document it. Next, extent. Extent means on how many items you have performed this procedure, that also needs to be documented by you. So you need to document nature, timing and extent of audit procedures that you have performed, and you should also record the characteristics of the items on which you have performed the audit procedure. See, you should also document characteristics of specific items or matters that have been tested. Let's say, for example, you are testing debtors. Debtors value exceeding 2 lakh rupees you have tested. So you need to document the characteristics. So value of debtors exceeding 2 lakh rupees that has taken place between so and so dates we have performed audit procedures. Like this, the characteristic of the item you need to document. Okay. Next, who performed that work and on which date that procedure was executed, and who reviewed the audit work and the date on which that audit work has been reviewed. So all these things you need to document. Got it? Yes. Next, discussions of significant matters with management, those charged with governance and others. So with management, those charged with governance and others, if you have discussed any of the significant matters, you should also document all those significant matters. Next, if information is inconsistent, information inconsistent means, see, let's say example debtors. I have already told you this example. Debtors, sale invoice of debtor is showing 10,000 rupees. You sent external confirmation to the debtor. The external confirmation from the debtor you received as 20,000. So now there is a inconsistency between these two things. How did you resolve that inconsistency? That also should be documented by you. See how the auditor addressed the inconsistency. Clear? Yes. Next, audit file. So what is meant by a audit file? See, all the audit documentation related to a particular audit engagement, if you collate them and keep them together, that becomes a audit file. See, one or more folders containing records that comprise audit documentation for a specific engagement of that particular year, you will call it as audit file. Next, timeline for documentation. See, audit documentation should be completed within 60 days from the date of audit report. So if the date of audit report that you have given is 1st of July so and so date, then from this within 60 days you have to finalize the audit documentation and keep it. Getting it? Yes sir. So 60 days from the date of audit report. Next, retention period. So this audit documentation that you have maintained, for how much long you have to retain it? It is 7 years. 7 years from when? 7 years from the date of audit report you have to retain the audit documentation. Getting it? Yes. Next, certain administrative changes you can make even after the 60 days also. So what will be included in the administrative changes? Some of the examples: deleting or discarding superseded documents. Superseded means certain draft versions. If by mistake you have kept them in the audit documentation, you can remove it even after 60 days, no issues. Next, sorting, collating and cross referencing the working paper. So sorting the working papers, all the documents relating to particular item, taking them and pinning them, or cross referencing the documentation, this thing is an administrative change which you can do after 60 days also. Next, signing of the completion checklist. Signing of completion checklist means, see, in the audit documentation file, so this is the audit documentation file. So in this file, what are all the documents should be included? For this, there will be a checklist. Understanding? There will be a checklist of what documentation should be included in the audit file. Now, signing of this checklist, that means checking whether this document is there, whether this document is there, whether this document is there. That can be done even after 60 days also. That is also a administrative aspect. Understanding? Yes. Those are some of the examples of administrative aspects. Next, ownership. Who is the owner of audit documentation? Of course, the auditor is the owner of audit documentation. Correct or not? Yes. So this is discussion of essay 230, right? So you know what to do. If you like this revision, you have to motivate me by mentioning the words the best lecture. Got it? Yes. So by this we will be completing the first part of marathon session. The remaining chapters revision you can find them in the second part of marathon session. Got it? Yes. So see you. We'll meet in the second part of marathon. Until then, take care. Bye bye. See you.